Forget the weather report! Tropical storm Melissa is hitting, and it's not just rain. This storm, and future ones like it, are set to cost the global economy over $200 billion annually by 2050. Is your money at risk? Right now, Melissa threatens Haiti, Jamaica. For these nations, a single major storm can cost 10 to 18% of their GDP in cleanup and debt. That's like the average American family losing $10,000 to $15,000 overnight, just for basic repairs. Local businesses, they don't just lose profits, they lose entire seasons. But here's the kicker. In vulnerable regions, 80 to 90% of storm damage is uninsured. That means you, the local taxpayer, the business owner, are shouldering the debt. And for businesses, the biggest financial killer isn't always direct damage. It's business interruption. Hurricane Sandy taught us this. $30 billion in lost revenues because companies just couldn't operate. So, what about your investments? Big money is already moving. Global investors now see climate change as a core financial risk. Funds are shifting away from regions with high storm exposure. Why? Because the cost of doing business there is skyrocketing. Banks are demanding higher interest rates, sometimes 1.5% to 2% higher, for loans in at-risk areas. That's hundreds of millions in added interest over a decade. This isn't just a trend, it's the new normal. Companies that ignore climate risk, they're seen as having poor ESG scores. This means less investment, higher borrowing costs, and slower growth. Over the next 10 years, analysts predict a potential $1 trillion in capital could shift towards climate-resilient investments globally. Investors want to know, is this company ready for the next Melissa? Business owner, an investor, or just want to protect your future? Understanding the financial cost of climate change is critical. How resilient is your portfolio? How prepared is your business?